You know what's fascinating? Most people research a company the same way they pick a restaurant. They check the star rating, maybe read 2 reviews, see if the price looks reasonable, and boom, decision made. 5 minutes, maybe 10 if they're being thorough. But then they wonder why their portfolio looks like a graveyard of bad decisions 3 years later. Jewish investors do something completely different. They research like detectives investigating a cold case. No stone unturned. No detail too small. No question too annoying to ask. They dig until the numbers start talking back, until patterns emerge, until the company's real story, not the marketing story, becomes crystal clear. And here's what nobody tells you about this approach. It's not about being paranoid. It's about being prepared. It's about understanding that the money you invest isn't just dollars and cents. It's your time converted into capital, your family's security, your future freedom all wrapped up in a stock ticker or a business deal. So yeah, you better know what you're buying. Growing up, I watched my grandfather research a single stock purchase for 6 months. 6 months. My friends thought he was insane. Why not just buy the S&P 500 and call it a day? But he had this philosophy, and it stuck with me forever. He said, if you wouldn't visit the factory, meet the managers, read every annual report from the past decade, and understand the industry backwards and forwards, then you don't know the company well enough to own a piece of it. That sounded extreme to teenage me. Now, after watching countless people lose money on companies they barely understood, it sounds like wisdom. So today, I want to show you exactly how Jewish investors research companies before putting a single dollar at risk. These aren't just tips. These are investigative frameworks built over generations, designed to separate real opportunity from expensive illusions. Some of this will feel intense. Some of it will feel like overkill. But when you're still profitable during a market crash while everyone else is panicking, you'll understand why this level of research isn't optional. It's essential. Before we dive deeper, I'm genuinely curious. What city are you watching this from right now? Are you in Miami trying to understand investing better? Toronto dealing with the cold and researching financial strategies? Or maybe somewhere international where you're just tired of losing money on bad investments? Drop your city below. I love seeing where people are consuming this content and building better financial futures from all over the world. Alright, let's start with something most investors completely skip. The founder's story. And I don't mean the polished LinkedIn bio or the press release version. I mean the real story. Where did this person come from? What did they do before this company? Have they failed before? And if so, how did they handle it? Jewish investors obsess over this because historically, character mattered more than credentials. You couldn't just trust a fancy title when your entire livelihood depended on whether someone would honor their word when times got tough. My Uncle Danny, brilliant guy, refuses to use GPS because he doesn't trust it. Spent 3 weeks researching a CEO before investing in his company. He found old interviews from 15 years ago. He tracked down people who worked with the guy in previous ventures. He even found a small business forum where the CEO had answered questions back in 2009, just to see how he communicated under pressure. What Danny discovered changed everything. This CEO had failed twice before, but both times he made sure his investors got some money back even when legally he didn't have to. That told Danny more than any earnings report ever could. It showed integrity, it showed long-term thinking, it showed someone who valued relationships over quick exits. So Danny invested, and that company is now one of his best-performing holdings, because the CEO navigated 2 recessions exactly the way Danny predicted he would, with transparency and grit. Most people buy stocks based on price movement or hot tips. Jewish investors buy people first, companies second. Because a brilliant business run by someone with no integrity is just an expensive disaster waiting to happen. And a decent business run by someone trustworthy can weather anything. That's why the first question isn't what does this company do? It's who runs it, and can I trust them with my money when everything goes wrong? Now here's where it gets interesting. Financial statements. Everyone says they read them. Almost nobody actually does. They glance at revenue, check if profit went up, and that's it. But Jewish investors read financial statements like archaeologists examining ancient texts. Every footnote matters. Every accounting choice tells a story. Every number gets questioned until it makes sense or reveals something hidden. I learned this from Sarah, a friend's mom who invested in commercial real estate. She taught me something that changed how I look at companies forever. She said, the truth is always buried in the footnotes and the cash flow statement. Revenue can be manipulated. Earnings can be adjusted. But cash, real cash moving in and out, that's harder to fake. So she'd spend hours, literal hours, analyzing cash flow patterns. Is cash from operations growing? Or are they just selling assets to look profitable? Are they collecting receivables? Or are customers not actually paying? Is inventory piling up, suggesting products aren't selling as fast as reported? She'd compare cash flow to reported earnings, and if they diverged significantly, she'd walk away immediately, no matter how exciting the story sounded. Because when cash flow doesn't match earnings, someone's either lying or doesn't understand their own business. Either way, bad investment. And the footnotes, those tiny paragraphs everyone ignores, that's where companies hide the scary stuff. Pending lawsuits, changes in accounting methods, off-balance sheet liabilities, related party transactions that benefit insiders. Sarah once avoided a complete disaster because buried in footnote 17 of a quarterly report, she found that the company had changed how they recognized revenue. Legal, but sketchy. 3 months later, that company restated earnings, and the stock dropped 60%. Everyone else was shocked. Sarah was sipping tea, completely unsurprised, because she actually read the footnotes. Let me ask you something that might sound weird. When you research a company, do you research their competitors even more thoroughly? Most people don't. They figure if they understand one company in an industry, that's enough. But Jewish investors flip this completely. They research the entire competitive landscape because you can't truly understand a company in isolation. You need context. You need comparison. You need to know if this company is winning because they're genuinely better, or just because the industry is booming and a trained monkey could make money right now. My mentor, Joel, absolute legend, collects vintage watches and refuses to fly, had this rule. Before investing in any company, he'd spend more time researching their top 3 competitors than researching the company itself. He'd read their annual reports, study their strategies, understand their strengths, and then he'd ask the killer question: if I were the competitor, how would I destroy this company? That question reveals everything. It shows you the vulnerabilities. It shows you whether the company's advantages are real or temporary. It shows you if management is aware of the threats or living in denial. Joel once researched a restaurant chain everyone loved, great food, expanding rapidly, stock climbing steadily. But when he researched competitors, he noticed something terrifying. 3 well-funded competitors were opening locations in the exact same markets with better technology, lower prices, and faster service. The company he was researching had no response, no strategy, no acknowledgement this threat even existed. He passed on the investment. 2 years later, that restaurant chain filed for bankruptcy because, surprise, they got obliterated by competition they never saw coming. Everyone else lost money. Joel was perfectly fine because he didn't just research the company. He researched the battlefield. And in business, understanding the battlefield matters more than loving one soldier. Here's something that separates amateurs from serious investors. Industry knowledge. Deep, boring, unsexy industry knowledge. Most people invest in companies without understanding the industry dynamics, the regulatory environment, the supply chain vulnerabilities, the cyclical patterns, the technological disruptions brewing beneath the surface. They just see a product they like and assume that's enough. Jewish investors do the opposite. They become mini experts in industries before investing a dime. And I mean real expertise, not surface-level Googling. They read trade publications. They attend industry conferences. They talk to suppliers, customers, former employees, anyone with ground-level insight. They understand margin structures, pricing power, switching costs, barriers to entry, everything that determines whether a company can actually sustain profits long-term. A friend of mine, Rebecca, unbelievably organized, labels everything, including her spices, alphabetically, wanted to invest in a pharmaceutical company developing a promising drug. Instead of just reading the press releases, she spent 4 months learning about FDA approval processes, patent cliffs, insurance reimbursement policies, and generic drug competition. She joined online forums where doctors discussed treatments. She read medical journals. She even contacted healthcare consultants to understand market dynamics. What she discovered was brutal. The drug had potential, sure, but 3 competitors were 18 months behind with better formulations. And even if this company got to market first, insurance companies were already pushing back on pricing, meaning projected revenues were fantasy numbers. She walked away from an investment that looked amazing on paper, but would have been a disaster in reality. And she only knew that because she understood the industry deeply enough to see past the marketing. That's the difference. Casual investors buy stories. Serious investors buy industries they understand. So let's bring this all together like a perfect brisket, slow-cooked, carefully prepared, worth the wait. What makes Jewish company research different isn't intelligence or access to secret information. It's thoroughness. It's patience. It's the willingness to walk away from 99 opportunities to find the one that actually makes sense. It's understanding that research isn't a checklist you complete in an afternoon. It's an investigation that continues until you either find confidence or find red flags. And both outcomes are valuable because avoiding bad investments is just as important as finding good ones. The Jewish approach is built on centuries of experience in environments where one bad decision could cost you everything. So you learn to ask every question, challenge every assumption, verify every claim, and trust nothing until you've seen the evidence yourself. That's not pessimism, that's protection. And in investing, protection is profit. Now I want you to do something specific right now. Go down to the comments and type this exact sentence, "I research before I risk." Just that. Put it in the comments because when you write it, you're making a commitment to yourself that you won't throw money at things you don't understand anymore. You're declaring that you're done being lazy with research and ready to be serious about building wealth. So do it now. Type "I research before I risk." I'll be reading every single comment, and I notice when people actually follow through versus when they just watch and disappear. And listen, hit that subscribe button right now, because what's coming in the next videos will completely transform how you think about money, investing, and building real wealth that survives generations. This isn't entertainment. This is education that actually changes your financial future. And you don't want to miss a single lesson. Like this video too, because it signals to me that this content matters to you, and I'll keep delivering exactly what you need to win financially. And here's what I'll tell you about the next video without giving away too much. It involves something most people think is outdated, old school, maybe even unnecessary in modern investing. But the families who still do this, they're the ones who never panic during crashes, never get caught off guard by market shifts, and always seem to know something everyone else missed. That's all I'm saying. You'll see it soon, and it's going to change everything you thought you knew about staying ahead in investing.